Alright, happy Tuesday everyone, and wasn't yesterday a big one? With the candle moving all the way to the 61.8 level on the downtrend from the most recent high as we came down from just shy of 72,000 down to the 53 level. We've come up. We broke through. We were looking at shorts at the resistance levels through the 50% level. We've retraced or rallied, I should say. We've rallied up to the 61.8 level, and we have just recently touched away, causing today from 10 o'clock. So we're talking almost 7 hours, and we have had a negative day, but that's not to say that that's how it's going to end. So let's just come a little bit shorter into the hourly time frame from the daily, and we'll look a little bit closer as to what we were looking for yesterday and what's happened today and over last night. So here we were yesterday at 2 o'clock. So we were touching the 50% level, the 0.5, and we were looking, this pink line had converted to liquidity support. So with this long candle, formed an imbalance, broke through, came down, retouched, and just remember that the 50% level is a guideline. You know, it's not a line in the sand. It's less conclusive than a liquidity wick. However, it's still an area that other people are looking at, and so we have to bear that in mind. And so with that, we've also got all through here, as we came up, we retested all through these wicks. There's a really tight movement. Even if we go up into here, as we're coming through all these liquidity wicks, which could have all been converted into resistance levels, but as we've come through this resistance looking for shorts, it managed to push through, so every candle has filled the candle of the candle before with no imbalances. So previous wick the highest wick of wick 1 of candle 1, candle 2 has an opening where candle 1's wicks are not touching the lows of candle 3 wicks. So this forms, for instance, this one, we've got an imbalance sitting through here, which is an area where price often falls through, where price all through here, every wick is filling the candle of each one. There was there wasn't even a tiny one for the 7 o'clock candle, even though it was I guess the strongest bearish move in the entire move down, but everyone has had their wick full. So this has all been mitigated. So let's see if we can just get rid of it. Because it's all mitigated, we have to start fresh. Let it all be, and that just opens it all up, and we can look forward from here. So this liquidity wick comes back from all the way back, or maybe too far, from over here, and what we can see is there's been an imbalance up, an imbalance down. So let's zoom in. And so because there's an imbalance over a liquidity wick, that doesn't actually confirm and eliminate the liquidity level, because it needs to hit and reject for it to be completed, but because it's blown through and has moved away and is now falling through, this actually even becomes even stronger. So it's a liquidity wick retest. And the same goes for this one, is a liquidity wick retest. LWR, which isn't a great name, but hey, let's work with that. So what we've got here is we've got fast move up, consolidation where we've obviously mitigated all these levels. So there were 3 levels through there that all just slowed the wicks down. The 61.8 level, which is just an emotional level, once again. But because it sat between 3 liquidity wicks here, and there's still 2 liquidity wicks above, there's obviously enough orders and enough selling orders and short stops that actually converted it, and there was enough selling pressure to push this down through the from 2 o'clock, 3 o'clock, and now we're in the 4 o'clock candle, which has 44 minutes to go. And then we're looking at where it's going to go, whether it's going to come down and fill this imbalance. And this imbalance, remember yesterday we wrote the little note for ourselves, fast moves up equals fast moves down. So we've pushed up over the last few days. There has to be exhaustion. Now, are we reaching exhaustion now? This has been the greatest pullback in this entire move. You know, this one was a 1 hour move. Here we've got 1, 2, 3, 4 into our 5th bearish candle, which is the longest one that we've had so far. This was more hours, but this is a bigger pullback. So where is that going to? Are we going to come back and retest these levels? So let's write them in and let's watch them as we go into the evening. I personally feel that we should come down and fill these imbalances. I think there's a real suggestion that this liquidity retest here, or from all the way back, they are definitely levels that we need to bear in mind. This is definitely something that's going to be challenged. So, and I think we'll find a little bit of there's a potential of one here as well. So we'll see how price reacts as it comes down through the 50% level. So as we come down, are we going to come up, move onwards, or are we going to come down, retest, and move down to lower prices? And they're the two potentials, the if this then that concepts that we're looking at. And so the levels that we can potentially see through here is, so let's just zoom right in. So remember, we want to see a lower wick. Sorry, if we're looking for a support liquidity wick, we want to see higher wicks on either side. So we've got, that's the low wick. So not there, not there, not there. What price is that? Low of 262, 864, 858. So that is one, which is nice because it also sees that we've closed here. There's a liquidity wick just above this one. So this is definitely an area where, you know, even through here we closed, we've closed, we've closed, we've wicked down, we've wicked down. So that is a layer, and that is a level that is of significance. So then we've also got this one here, which is kind of in the middle of anywhere. It's not something that I'm looking to price off. That's a low, but that's a lower wick, higher wick. And that is it. That's really pretty simple. Could even come back down here. There are two low wicks. There's nothing through here, so this is a real fall through zone. So basically, if we don't find support at this level, support at this level, so if price comes down, closes, and then the second candle closes up, that would be an area for me to consider going short, but that would have to determine what time of the day it is. So if it's after my bedtime, then I'm not looking at this and I'm going to miss the move, which is fine because there's always another move. If I am awake and the candle comes down, closes and rejects, it can still be a bearish candle and the next candle is bullish, then that's something. So for instance, if I see this sort of move, these three candles, if I see that sort of play, that is definitely something that I would look at. Sort of two candles down, one candle up, there's strong wicks up, still a bullish candle. That is a bearish candle. However, the wick is lower at the bottom and the candle is sitting in the bullish half of the wick, of the entire candle body. So because it's shorter and it's sitting higher up, it still shows there's a lot of bullish pressure that has pushed it away from that price. So if I see something like that, then I will definitely consider taking a position and moving from there. However, if that doesn't happen, then this is my second zone that I would consider. Now, I never use imbalances as an area to go long or short. However, it's an area that I know has a higher chance of price coming back to. It's another one of those magnified areas where price is attracted to, but it's not an area that I look for longs. However, or shorts. However, this is an area that there is an area at the top, and this does carry two levels right in the middle, which isn't my normal play, but it's something that I would look at if price comes in there. So let's see where we go from there, and happy trading. Thanks everyone. Catch up.